First discussion this afternoon, ProShare has unveiled its latest capital market report titled Nigeria's Capital Market and the Quest for a $1 trillion economy, emphasizing the critical role of robust capital market reforms in Nigeria's journey towards achieving a $1 trillion GDP by 2030. The report highlights the urgency of strategic economic policies and deliberate capital market development to unlock the country's potential for sustained growth. The report underscores the substantial progress Nigeria's capital market has made over the past 2 decades, while acknowledging its persistent limitations. The analyst pointed to the market's shallow structure and insufficient depth to provide the long-term financing required for transformative infrastructure projects. Mr. Tosin Ige is the head of research at ProShare. He joins me live in the studio to have more or to hear more about this. Good afternoon and thank you so much. It's really good to have you live in the studio.
Good afternoon. Thank you for having me.
Great stuff. I read through this report. A lot of work put in here. I must say ProShare has always been doing that. We didn't expect anything less. Let's begin by talking about the central thrust of this report in relation to Nigeria's economy and obviously the capital market ecosystem. Okay.
Thank you once again for having me.
Yeah.
And as one of our flagship reports for the year, this particular report, the Nigerian Capital Market Outlook Report 2025, is looking at the nexus between the capital market and the economy. Now, as key stakeholders in the market, one of those things we have found out is that the market has grown in strength and scope. And if you consider the equity side of it, the market capitalization as at the end of last year, around 62 trillion naira. That's quite massive. And then when you consider the debt side, it's also is around 78 trillion also. Now, but what we find out is that the market is growing in isolation. It is yet to connect to the economy. And so we dial back and say, now, rather than looking at the market in isolation, the outlook for the market, let us connect it to the economy, because you'll agree with me, we have a target from the economy side to achieve the $1 trillion economy. So we'll say the market, originally, the purpose of the market is actually to finance long-term funding. But what we have seen is that the market is yet to come into that terms of providing the long-term funding for the economy. Now, naturally, you expect the market to be the source of funding for infrastructure, even for business growth. But if you dive back and you look at the sectors, the growth sectors in the economy, you'll find out that we're talking about the likes of ICT, financial services, trade. But when you look at the market sector, it doesn't reflect that growth.
True.
Even from the market, when you consider the aspiration of the government, as a $1 trillion economy, what companies, what sectors are we looking at to actually drive this growth? When you look at the market, you are going to see that it doesn't suggest that linkage of sectors or companies that are driving the market vis-a-vis the sectors or the company that will take us to that target of the economy. So that's the thrust of the report, to say, let us connect it. Look at the market, which is the source of funding for long-term projects, and let us see how it fits into the target $1 trillion economy of the government.
That sounds very good, looking at what government is looking at, and what this report stipulates. But how close is Nigeria to achieving this $1 trillion economy? And of course, what is the role of the capital market in making this happen?
Thank you very much. I think I can say that's the foundation upon which we build this report. And we're saying that in the absence of rebasing,
yes,
let's just take it at the base level, in the absence of rebasing and with the exchange rate pressure, we find out that we are actually far away. Let me give a background. In 2023, we ended 2023 at GDP around $360 billion. Now, this is because exchange rate at that time was around 633. We ended the exchange rate at that year with 633. So that gives us like the gap of around 6.
Almost, if not more.
Yeah, around 640, thereabout. Yeah. Now, when we come to 2024.
Yeah.
Now, our estimates suggest that the GDP is less than 200 billion because of the exchange rate pressure. Don't forget, we ended 2024 with an exchange rate of around 1,550, thereabout. So that puts so much pressure on the GDP, giving us less than 200 billion to achieve in terms of the GDP value. And that gives, you know, the gap of around over 800 billion. So that gives us that we are far away from the $1 trillion economy without rebasing, without all of this. But that is where the report comes in to argue that there is a role for rebasing that we are trying to do. And then there is also a role for the capital market. And then there is a role for new growth area, which we also identify at ProShare. One of the things we say is that the 46 sectors or activity sectors that the MBS classified the Nigerian economy is doesn't allow for a streamlined allocation and monitoring of the sector. So in our report, we recalibrated these sectors into 14 sub-economies. Now, and we identify them in order of priority, and these sectors will deliver the growth. So when we put all of this into context, in the current setting, we are far off. But we are saying from this report, giving a ray of hope that with all that we see, is it the rebasing, the capital markets, they offer hope to take us to that $1 trillion economy.
That sounds good, but your perspective on the current GDP rebasing exercise by the, of course, National Bureau of Statistics, how will it be instrumental to helping realizing this $1 trillion is it like bringing in some other sectors that have not been calculated before, you know, putting together these figures?
As I said in the last thing, it's one of the areas we're looking at.
Yes.
Don't forget, I pointed to 3 areas. We're looking at the capital market, the rebasing, and then we're looking at new growth area. Now, what our argument and our estimate is that the rebasing itself offers us a leverage to achieving that $1 trillion economy. And we did an estimate with the country's GDP as at the end of 2024.
Yes.
We estimated it to be around 490 billion. Now, which leaves us with a gap of around 510 billion. Now, that is for the rebasing. And don't forget, the rebasing comes in 2 models. Now, there is the aspect of updating the base from the current 2010 to 2019, which is in line with what the MBS is proposing because of the relative normalcy of 2019. That's on the one hand. And on the other hand, we are also saying that we need to reweight some sectors. Now, normally when you want to calculate in the basic mathematics, when you want to calculate value, so price times quantity. Now, what the rebasing, the other leg of the rebasing, what it's doing is that is expanding the Q part of it. That's the quantity part of it. So we see the new growth area, the areas, you agree with me, for the creative industry.
Yeah.
Before now, we've not captured this as a way.
Yeah.
The same thing with the digital economy. We've not captured them. So that's one of the things Rebasing is doing to expand that. So it gives us more coverage in terms of the creative economy, more coverage in terms of the digital economy, even in terms of the marine economy. So we are able to capture more for the quantity aspect. So that gives us the value, it delivers a higher value for us. That's why our estimate suggests that we should go back to around 490. And that definitely will make us the largest in Africa because of the value. But it then brings us closer to the $1 trillion. And from that, we expect that if we start growing within the range of 13 to 15% within 2025 to 2030, we're likely to achieve that. Yes, yes. Nominal GDP.
Yeah.
Basically, nominal. Because, you know, even the $1 trillion economy, we're talking about the nominal GDP.
Yeah.
So, and of course, even when you look at it from the real GDP, the CBN, I think they are quite handy in terms of managing that access. So that shouldn't provide a problem. But the nominal GDP growing within the range of 13 to 15%, which is not so different from what we have been doing currently. So we should be able to achieve that. And our argument is that everyone has a role to play. The capital market has a role to play. The rebasing is providing that leverage, but there are also actions, what we call IPOs, incentives, privatization, and optimizations that can be complemented with whatever the capital market offers us that will take us to that $1 trillion economy. The point is that we are seeing it in a positive light. To say, beyond the noise, let us dimension these figures. And that's what we do, because in data we trust. In God we trust. Every other thing bring data. So we leverage those data and we see that, yes, there is positive.
Indeed, we need to work with data for us to get actual, for the actualities. I agree with you. But there are also some concerns, of course, in some quarters about that the Nigerian capital market has been more about investments and returns. I know people that all they do is just put in their money, and of course they want returns back. You know, they want their monies to work for them, but not necessarily about capital formation. Now, what does this really mean?
So the argument there is that we've observed that the market is more of an investment platform rather than capital formation, the Nigerian capital market. Here's why we say that. You know that the capital market is meant to provide capital for funding, for business growth, and even from the government side, is also for long-term funding for maybe infrastructure or whatever the government is intending to do. But we are not seeing that. Here is the point. If you look at the debt size, we see that companies have only been to the market to raise CPs, not corporate bonds. Now, that shows that they are at the short end of the market, trying to just raise capital for working capital, and not for financing the business expansion, the growth that would actually complement the government effort. If you want to argue that on the debt side, we've seen government activities, the TBs, we've seen them in the bond market, but you know that governments run more like a rolling plan, if I can call it that way, rollover of debt, because there was a report that suggests that there is about 16 trillion naira in 2024, and they use about 10 trillion as for maturing TBs. So that shows that for the government side, it's always been about, you know, a rollover of debt. But when we're now looking at the equity side, now what will give us that capital formation, the long-term funding for company, is that they will come to the market for IPOs, through IPOs, to raise funding. But what we noted in the last few years is that the market has always been, companies are entering the market through, by way of introduction. And what that means is that the funding is not actually going to the company. It's going to existing shareholders who are just, you know, doing away with some part of their shares. So the dearth of IPOs in the market suggests that we are not using the capital market to raise long-term funding. And so in doing that, we're short-charging the market or the potentials of the market, because the market is supposed to fund growth from the government side, from the business side, but individuals, of course, I must say it has been providing that investment for individuals, for investors, because you can go to the market, make money. So that's the investment side of it. But we need the market to actually come to terms with its original purpose, which is the capital formation. And here we're looking at, even if you want to look at the two major markets, we have the NGS and FMVQ. Now, our argument is that NGS can actually support the listing of or the funding of some projects in the MTEF, the Medium-Term Expenditure Framework. Now, we have a number of projects that the government can actually come to the market, because NGS also it has equity license, it has a debt license. So we can come to the market through the NGS to raise that funding for projects in the MTF. In the MTF. And on the other hand, the FMVQ, we can also leverage the FMVQ for public listing. I think in our earlier report, Outlook report, we identify a number of projects, assets, national assets, some of them idle, some active, that can actually be brought to the market, that we can actually list on the market. Now, what this does is that, first, it signals to investors that your market is doing well, since governments can bring their enterprises to the market. And on the other hand, it also provides an alternative and viable funding source for the government. Because now you won't bother about whether this company is running efficiently. Because it's on the market will demand that efficiency. And so you'll be able to price, because as a majority investors, maybe you give the government take 50% stake in that company, you are likely to be receiving dividend. That's because true. As a majority shareholder, you call for dividend. And so this will provide funding, and it will also drive efficiency. Nigerians can also invest in some of this company. So it's all better off. The market provides that platform. But what we are arguing is that we have not been leveraging the market enough to yield this potential, to unlock. We really need to unlock the potentials of the market, be it equity and even the debt market.
Beautiful insight there. But beyond the capital markets, can you highlight some necessary enablers, of course, for achieving this $1 trillion Nigerian economy as outlined in this report? The CBN is doing a lot. The banks are trying to, you know, to recapitalize and all of that, get enough money and all of that. But what more do you think are necessary enablers for achieving this?
So when we talk about enablers in the report, what we are basically pointing to is the fact that beyond the three-pronged approach that we've talked about in terms of market rebasing and all of that, incentivizing the business, we are saying that there are some triggers that must be in place for all of this to work. Now, take for instance, one of the key enablers we identify is energy. Yeah. We are saying it's a necessity for us to have energy security and affordability. Now, if your manufacturing companies and all the industrial companies are complaining of using about 30% of their operating costs on energy, and yet is not so available, then it becomes a problem because it will actually undermine their productivity. So that's why we are saying energy is one of the enablers that we need to sort out. Now, across, whether you talked about even the electricity, or you talk about the gas, or you talk about the petrol, all of them together as energy, we need to secure ourselves in terms of those energy. Now, don't forget, even the global economy is reversing its trend because of the, Trump 2.0. We're likely to see that drive for many of those major economies in terms of energy transition. Yeah. So we need to leverage what we have in terms of energy to drive our industrialization. That's one of the enablers we're talking about. And we also talk about the justice system. Now, investors want to be sure that their rights are protected.
True.
Is one of the enablers. Another one we're saying is that we need to recalibrate our educational system and our vocational system such that it fits for purpose. Now, we do not expect that there will be an academic institution in the 21st century that won't be sending their students for internship. Now, this it bridges that gap between the town and gown.
True.
Now, that's what we said. Basically, our argument is that we can't be operating our system in isolation. We need a whole of society approach to things. So between the academics and the market, there needs to be that rapport. So that's one of the enablers we're thinking, rethink the educational system to deliver on this. So those are the enablers we identify in this report that are key to delivering this $1 trillion economy. Even if the markets are working, we recalibrate and the rebasing gives us one of those things. Without these enablers, we'll be deceiving ourselves because they will fall short one way or the other.
Well, it's been an interesting conversation, Mr. Tosin Ige, Head Research at ProShare. Thank you so much for making sense of this report. We'll see how this is. Keep it up and see how we get to this $1 trillion economy. I must thank you so much for your time. Thank you for coming live into the studio. Let's take a break. And when we come back, the discussion will shift to the telecommunications space as telecom subscribers react to NCC's approval of tariff hike for telcos. The President, National Association of Telecom Subscribers, Mr. Adeola Ogunbanjo, will join me after this break to continue this conversation. This is Business Nigeria.